Well, the rand is continuing to trade weaker against major currencies, extending the previous day's losses. Federal Reserve minutes yesterday pointed to U.S. interest rates staying higher for longer, boosting the dollar and hurting emerging market currencies such as the rand. Let's speak about all of that and more with Roy Mutooni, Analyst at ABSA Asset Management. Roy, welcome back to Daytime Update. Let's begin with an overview of how the local index is faring so far today, and has the rand improved at all?
So the rand is basically flat. It's weakened slightly. It's at about 1670, and that sentiment is also being reflected in the market. The market is flat. It's probably up about 10, 15 basis points, and what you're seeing is a big spread between the winners and the losers. So on the winning side, you have the mining companies, Exxaro, Anglos, Glencore, all up over 1%. And on the losing side, you have the telcos and a couple of the locals, such as Aspen and also Process and Northern, all down more than 1%. But yeah, it's a quietish trading market. I think still digesting the news from the Fed minutes last night. And all the macro stories that came out over the last few days.
And oil prices, of course, are seemingly steady today, at least, because investors continue to mull falling U.S. stockpiles, as well as a global recession issue. Gold has edged up. Put all of that in context for us.
So oil is fighting a simple conundrum. So one thing is clear is that we don't actually have sufficient supply, but at this point in time, demand is soft because of China. But I think what you're seeing from forecasts and inventories and stockpiles is that Chinese demand will come back, and it, in all likelihood, will overwhelm the supply story next year. So that provides an underpin to oil prices. Gold, on the other hand, remember, gold doesn't earn you any income. So when interest rates are rising, you'd rather have paper assets that earn you an income and that don't cost to carry. So with the news yesterday that the Fed minutes pointed towards interest rates being higher for longer and also increasing from current levels, I think that's provided a little bit of a dampener on the gold price, and that's probably why we've seen it maintaining its lower level. So very little of the geopolitical influences here. This is all macroeconomic and demand driven.
Private education company Curo says that its revenue rose by just over 15%. That was to end June.
So that's a very good result, I would say, and I think it continues a trend of, I think the last couple of results that they've reported have been improving in this way. So their learners went up by 7%, revenue up about 15%, which just tells you that fees also went up as well, but also cash generation was also quite good. So just showing that I think they're finding their niche. They're being accepted more and more within normal life here. And as a business, they're generating cash and continue to grow. So impressive results. I think the market should like them.
I wanted to ask you about the coal miner, Thungela Resources, which has recently cut its guidance due to rail woes. It says that it's now reached an agreement with Transnet. Does that then mean that we're going to see this issue finally put to rest, the rail struggles?
Not really. I think you remember, Transnet had basically said, we're going to force majeure, which means we can't keep our promises. Right now, Transnet basically say, okay, rather than what we used to promise 77 million tons a year, what we're going to guarantee is that we can transport at least 60 million tons, up from the 58 million that they transported last year. So it just means that there's a little bit more certainty. It's not a guarantee that we'll be able to satisfy all the demand out there, these really good prices for coal, but it means that at least they have some visibility as to their ability to truck coal, particularly to export destinations. So not the news we're expecting, but not the good news that we wanted, but at least it's a step in the right direction. At least they're shipping stuff around.
Let's end on this note. Naspers said that it plans to sell some of the process shares to fund a buyback. Let's talk practicalities and figures.
So this is that part of that huge convoluted transaction that started last year when they bought, when Naspers bought Process and Process bought Naspers so that they could try and close the discount on a sum of the parts basis, because both of them own Tencent. And the sum of the parts was not adding up to the whole. So what management have decided to do is that the best investment they can make is continue to buy their own shares because they consider them cheap. Naspers, the lockout from them buying their own shares ended yesterday. So all they're basically saying is that we're going to keep buying back our shares, process will keep buying back our shares, and we'll sell a little bit of Tencent to ensure this whole circus continues. So, yeah, I think it's not new news. I think it's just simply an announcement that the lockup that they had is no longer in place, and they can continue doing this. Hopefully, at some stage in the future, this discount gets closed and shareholders benefit.
Roy Mutooni, a pleasure to speak to you, sir. Thank you very much.